Let's assume there is an uptrend. The price has broken higher lows, tops. You know, I always wondered what the forest smells like. It starts to continue falling. Like, imagine being like 300-foot tall giant and just lean over the whole forest and... You like my new smile? Trading attracts many people with the promise of quick profits and instant financial independence, which is not going to happen that quickly, by the way. And it was the same with me. I started trading and it ended up with being at the loss for like the first 2 years straight. Well, it's obviously different now, but trading is nothing fun, especially at the start. I mean, it can be fun sometimes if you have some luck maybe, but we want actual knowledge, right? So during this time, I realized that to achieve some sort of success in the financial markets, it is necessary to have solid skills, discipline, systematicity, and most importantly, experience, of course. So I want to show you what practices made it easier for me to gain actual experience and finally be solvent. Experience is the most important element in trading, and the best way to get it is to simply dedicate time to trading every day, testing various strategies and analyzing their effectiveness. It's best if you just create a demo account and do whatever you like, and then save your trade results whatever you want, really. Over time, you will start to notice different situations that you have already seen several times. You will start to see what works and what doesn't, and this is pretty much how you build your experience. The more hours you spend on the market, the better. Of course, it's not about sitting for several hours a day and staring at the chart, either. It's kind of all about balance. You will not learn trading in a month, so you just need to spend as much time as you can without getting totally exhausted of doing it, because when you try to do it when you are exhausted of it, you usually end up making senseless decisions. So I don't know, just try to put as much energy as you can, but smart. This brings us to the next element, which is systematicity. And please, I will get practical in this video really soon, so please wait, okay? Let me say my shit. As in literally every profession, systematicity is the key element here. You don't realize how unimaginably helpful it is in gaining experience. You'll develop that trader instinct much faster, without which you can't really do anything. Thanks to systematic continuous work, you will understand various important elements and nuances faster, but you will also get used to controlling your emotions faster, which is also a very important element. It is worth sticking to it because any longer break from trading in general means additional time to reintroduce yourself to it. By the way, you can make a comment right now if you would like to, of course, if you like the way we're making content. Like, you know, actual valuable information about trading mixed with me, Bofu. Now let's talk about strategy a bit. Of course, you can't trade without any strategy or set rules to follow, and not like, I open a position with so many pips of take profit and so many pips of stop loss. I mean more like an indicator, like I try to decide to open a position when there is a strong trend in one direction. General guidelines of action work much better than a precise rules of what and when to do, because trading is very subjective and unpredictable. It often happens that you decide to take a trade when the price has not developed as you planned in advance, but you just feel like it's a good situation to risk some amount of money. As you might expect, you can implement a working strategy by copying it from some guy in a bathrobe who promises you $1,000 a day. The strategy that will work for you will be something completely different than what you will find anywhere on the internet. Because each of us is different, we have different tolerance and for risk and stress, and we may prefer different assets. One will trade without any support, resistance or indicators, and the other will prefer to trade with a moving average taking into account support and resistance zones. And you know what? They both will be able to trade profitably if they have enough experience in the market. It's just funny to see all the strategies pushed by fake gurus that are supposed to make you a millionaire in 6 months. Now, before we move on to practice, we need to talk about capital management and risk control. The fastest way to lose all your capital is to trade without risk control and capital management. No matter how good your strategy is, you will not be solvent if you do not have good risk management. I would say this is more important than even the strategy itself. Before taking a trade, always determine how much you are willing to risk on a single trade, okay? Never invest more than you can afford to lose. You must always have a plan in case the market situation does not go simply your way. I think it seems pretty simple, but it's so important, so please keep that in mind, okay? Now finally, practice. I will show you an example of how I create an action plan in case the price go wrong. This is of course not a perfect reproduction of the real case, it's just to show you more or less how it works, so don't get mad, okay? Let's assume there is an uptrend, the price has broken higher lows, tops, and so on. Let's say there is a support here, resistance here, and second lower support here. Okay, and let's say that the price starts to slowly go up, and on a lower time frame it starts making higher highs and lows, so I go long. And I also assume the worst case, that the price turns around and falls below the support. Now let's say that on lower time frame it starts to continue falling and go slowly down. So I reverse the position and go short. That's what I do. And the price slowly comes down to support, where I close the short and go long again if I notice that it starts to bounce. I will also add that if the price suddenly turned around and rose above the resistance again, it would depend on the context of course, but I often just open the long again. As a rule, even if the price does not reach the resistance, it somehow reacts in this case, but let's say that it reaches about halfway to the resistance, and there I close the long. As a result, my closed long, even if not entirely, at least partially, covers the loss after the first position, and thanks to the short I managed to get out of the whole situation with a profit, even though the price initially did not go in the direction I expected. Of course, when I normally analyze what I will do before opening a position, I do not simulate it as precisely as in this example. I did it so that everyone would understand what I mean. Normally, when I carry out such an analysis, I designate places where, for example, I will reverse the position or add it to the position, and when the price reaches one of these points, I decide based on the context, meaning price behavior, whether I will do what I planned. Because I don't always do what I set for myself, the reason is that trading is not based on rigid rules and everything I do depends on a given situation, so I only pre-plan what I can do when the price reaches a certain level, but I make the final decision after analyzing the price action at a given moment when the price reaches that point. I've noticed that it is very easy for a beginner trader to fall into various dead ends that offer large profits in a short time, and the sooner you realize that it is not a quick way to make money, the better. Risk management is often overlooked, which is what I base my strategy on, with the assumption that at the end of the day my goal is to earn as much as possible on winning trades and lose as little as possible on losing trades. This element is often omitted either due to lack of knowledge about how important it is or lack of risk management skills. Either way, the upshot is that only about 10% of the day traders make a profit. That's why it is important to always think before you click sell or buy what you will do if the price goes in the wrong direction and how you want to get out of it, and what if the price starts going in the right direction, and how, if you deem it appropriate, you can increase your position to earn more. I made a video that describes in more detail the process of what I do when the trade doesn't go my way than the example shown here, so I recommend you check it out as well. Yeah, that's pretty much it for this video. You know, I always wonder what the forest smells like, but not from the average person perspective, from a giant perspective. Imagine being 300-foot tall giant and just lean over the whole forest, and yeah, what it would smell like. It's gotta be different. Smell. It's gotta be more fresh. Okay, that's it, bye.